Hello and welcome to today's video where we'll be discussing the current state of the stock market. Let's start with some basic concepts and definitions. The stock market refers to a place where stocks or ownership interests in a company are bought and sold. When an individual buys a stock, they become a part owner of the company. And when they sell the stock, they can receive profits or losses depending on the performance of the company and the stock's price. The stock market is a crucial part of the global economy and can impact people's lives in numerous ways, from personal investments to the health of companies, industries, and even entire countries. Now, let's move on to the current state of the stock market. As of our knowledge cut off in 2020, the stock market has been experiencing a period of growth fueled by multiple factors such as a recovering economy, low interest rates, and increasing investor confidence. One of the key indicators of the stock market's performance is the SU 500, which tracks the performance of 500 large companies listed on the stock exchange. As of early 2023, the SU 500 is trading at record highs, reaching levels not seen since before the COVID-19 pandemic. This reflects a broader trend of rising stock prices and increasing investor confidence. Another key player in the stock market is the technology sector, which has been driving much of the recent growth. Companies such as Apple, Amazon, Facebook, and Alphabet, Google have seen their stock prices soar in recent years, driven by strong earnings growth and expanding market share. However, it's not just tech companies that are performing well. Other industries such as retail, healthcare, and energy have also seen their stocks perform well, driven by a combination of factors such as increased consumer spending, technological advancements, and favorable market conditions. Now, let's talk about how you can get involved in the stock market. The first step is to educate yourself about the stock market and the various investment options available to you, such as individual stocks, exchange, traded funds, ETFs, and mutual funds. It's important to understand the risks and rewards associated with each investment option and to create a diversified investment portfolio that aligns with your personal financial goals. Next, you'll need to open a brokerage account, which allows you to buy and sell stocks. There are many online brokerage platforms to choose from, each offering different fees, tools, and resources. It's important to compare your options and choose a platform that meets your needs and aligns with your investment strategy. It's important to stay informed about the stock market and to regularly monitor your investments. This can help you stay on track and make informed decisions, whether it's buying, selling, or holding onto your stocks. The current state of the stock market is strong, driven by a combination of factors such as a recovering economy, low interest rates, and increasing investor confidence. While there are many investment options to choose from, it's important to educate yourself, create a diversified portfolio, and stay informed to make the most of your investments. Let's talk about the stock exchanges. Stock exchanges are the platforms where stocks are bought and sold, and there are several major stock exchanges around the world, such as the New York Stock Exchange, NYSE, and the NASDAQ. These exchanges bring together buyers and sellers, and the prices of stocks are determined by supply and demand. When there is a high demand for a stock, its price will rise, and when there is less demand, its price will fall. Another important concept to understand is the stock market index. A stock market index is a collection of stocks that are meant to represent the performance of a particular market or sector. For example, the S&P 500 is a widely followed stock market index that tracks the performance of 500 large companies listed on the NYSE and NASDAQ. By tracking the performance of these stocks, investors can get a good idea of how the stock market is performing as a whole. In addition to the S&P 500, there are also other stock market indices that track specific sectors or regions. For example, the NASDAQ Composite Index tracks the performance of all the stocks listed on the NASDAQ, and the MSCI World Index tracks the performance of stocks from 23 developed countries. Now, let's talk about stocks and how they are valued. When a company wants to raise capital, it can do so by issuing stocks. The stocks represent ownership interests in the company, and when an individual buys a stock, they become a part owner of the company. The price of a stock is determined by its earnings, growth prospects, and the overall market conditions. The earnings of a company are reflected in its earnings per share, EPS, which is calculated by dividing the company's earnings by the number of outstanding shares. A company with high earnings and a high EPS is generally seen as a more attractive investment, as it has a better ability to pay dividends and generate returns for its shareholders. Another key factor that affects the value of a stock is its growth prospects. This refers to the company's ability to grow its earnings and revenue in the future. Companies with high growth prospects are generally more attractive to investors as they have the potential to generate higher returns. The overall market conditions also play a role in determining the value of a stock. For example, during times of economic growth, stocks tend to perform well as companies are able to grow their earnings and revenue. During times of economic uncertainty, such as a recession, stocks tend to perform poorly as companies are less able to grow their earnings and revenue. The stock market is a complex and dynamic system that is influenced by a wide range of factors, including the performance of individual stocks and the overall market conditions. Depth to the explanation of the stock market, including an explanation of stock analysis and trading strategies. Stock analysis is an important tool that investors use to make informed decisions about the stocks they buy and sell. There are several methods of stock analysis, including fundamental analysis and technical analysis and technical analysis. Fundamental analysis involves looking at a company's financial statements and other data to determine its financial health and future growth prospects. This type of analysis takes into account factors such as a company's earnings, revenue, debt levels, and management quality, among others. Based on this information, investors can make informed decisions about whether to buy or sell a stock. Technical analysis, on the other hand, involves looking at charts and other data to identify patterns and trends in the stock's price movements. This type of analysis is based on the idea that stock prices follow patterns and that these patterns can be used to predict future price movements. Technical analysis takes into account factors such as support and resistance levels, trend lines, and moving averages, among others. In addition to stock analysis, there are also several trading strategies that investors can use to make money from their investments in the stock market. Some of the most popular trading strategies include day trading and value investing, swing trading, and value investing. Day trading involves buying and selling stocks within the same day, taking advantage of short-term price movements. This type of trading is best suited for experienced traders who have a good understanding of the stock market and the ability to make quick decisions. Swing trading involves holding stocks for a period of several days to several weeks, taking advantage of medium-term price movements. This type of trading is best suited for traders who have a good understanding of the stock market and the ability to make informed decisions about the stocks they buy and sell. Value investing involves buying stocks that are undervalued based on their fundamental analysis. This type of trading is best suited for investors who have a long-term investment horizon and who are looking to build a diversified portfolio of stocks. In conclusion, the stock market is a complex and dynamic system that requires a deep understanding of key concepts and trading strategies in order to make informed decisions and generate returns. Whether you are a day trader, a swing trader, or a long-term investor, it is important to stay informed and to continually educate yourself about the stock market and the factors that drive it. Like, comment, and subscribe it.